Everyone quotes the price to earnings multiple, yet M&A professionals are using EV/EBITDA multiple. Why is that? Well, we first need to understand the major issue with the PE multiple. PE, or price to earnings, is equal to the price per share over the earnings per share. When you multiply both the numerator and the denominator by the total number of shares outstanding, you get equity value over net profit. When you flip this, you get net profit over equity value, which is equals to return on equity. So naturally, the inverse of the PE multiple is the return on equity. The main issue with PE and return on equity is that they are distorted by debt and borrowing. Let me explain. When comparing two identical companies with the same operating profits, the company that has more debt in its capital structure will yield a higher return on equity. Therefore, when you're comparing return on equity and therefore PE multiples across companies, it's not going to make much sense, as different companies have different levels of debt in their capital structure, and so that's going to distort the PE multiples and it's just going to be noise. To solve this issue, M&A professionals use return on invested capital instead, which is equals to earnings before interest and taxes, also known as EBIT, divided by the equity plus debt, also known as enterprise value. And when you flip this equation, you get enterprise value over EBIT multiple. So coming back to our earlier example, same company, identical operations, and same operating profits. Now you have the same return on invested capital and the same EV/EBIT multiple. The debt and borrowing in company A no longer fools us. Now, I wouldn't say we can completely disregard PE multiples. It's just that they are more relevant for stock picking, as stock pickers have to accept the capital structure of the public company they're investing in. In mergers and acquisitions, however, the acquirer usually will take control of the company and can adjust the capital structure as they wish. Follow me here for more valuation insights.